Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was an interesting day of trading today as the ECB, Bank of England both had rate decisions. And heading in tomorrow, we have the non-farm payroll report. The Bank of England kept rates on hold and did not release a statement, while the ECB, on the other hand, bit of thunder here. We're in Tampa, which is the lightning capital of the world, so don't worry. The ECB kept rates unchanged, and at the press conference that followed, Draghi just basically went over the status quo, but did state that he believes that he has backstopped the economy with the new bond purchase program, and he would not like to have any more measures with Greece with restructuring their current bailout deal. But let's look at some of the setups that we had going into the trading last night and how they have reacted today. As you can see, the Great Britain bound USD had broke below the descending trend line that has capped the price action for over a year, and it looked as though, and it also broke below the trend line that the pair had followed higher through September. It looked as though the pair was ready to move on lower, but it did burst higher with risk today, and now is back above the trend lines and is currently sitting basically right at the 50 fib from the move lower. Heading into tomorrow's trading, based on how the non-farm payroll report comes out, which I believe is expected to come in around 115,000 jobs. If the number comes in better than expected, that should be strong for the dollar, and we could see a bullish reaction, which would mean another push down lower for the Great Britain pound. We could see another test of maybe the 167, 161 level at this trend line. But if the number comes in lower than expected, that could lead to expectations of further the continuation of the mortgage-backed bond purchase program, and we could see the pound move higher. And the first level of resistance would be this trend line around 162.30. If we break that, we could head up to 163. So it's rather it's sitting right in the middle of the range, but you want to watch the price action if we get a move down towards towards either one of the extremes of the range, or you could go long after the news. The next pair that we're going to look at is the Euro USD, because it's the one that most people would be most interested in trading. We see that the Euro USD broke higher today after Draghi's comments at the press conference, and I guess there was a relief rally and people getting out of their shorts. We can see that the pair moved up rather almost a whole cent towards the 130 level, and it broke above the 128.90, but more importantly, it moved all the way up towards the test of 0.618 fib at 130.30. Now this level has capped the price action, and based on how the press conference goes tomorrow, I mean the release of non-farm payroll tomorrow, we could see very strong market movement here. A break above the 130.30 would open the pair for 131.7, but if we get a stronger number than expected, we could see the pair move back down towards the 128.20 level, which actually coincides with the 200-day moving average. So we're going to have to watch the initial reaction on the Great Britain pound and Euro USD with the news after non-farm payroll, and then look for the levels that we could anticipate the crosses moving to. The last pair that I want to take a look at is just the New Zealand USD, because it's just interesting in the fact that, as we know, for the last few weeks, the pair has been trending from the top and the bottom, top of the bottom of this current range between 83 and 83.50 and 82.20 and 81.85. The pair did move down to the bottom of the range today and has managed to move back up higher. But when watch this during the data release tomorrow, if we get a weaker than expected non-farm payroll report, we could easily see this pair move all the way back up to the top of the range to an 83.50 over the next few trading sessions. But if the number is disappointing, we could finally get that break below 81.84, and we could be on our way down to 80.30. All right, traders, this is Chris Keene from akeenpointofview.com. Keep your eyes on non-farm payroll. 115,000 is expected. A better number could lead to a stronger dollar. A weaker number could lead to a strength across the board against the US dollar. Of course, it is non-farm payroll, and it is very difficult to trade, where we have a lot of whipsaw action. The first reaction is quite often the wrong one. All right, everybody, have a good weekend and keep your trades keen.